Nick, you know, like in this time, VCs trying to be on time, just not to be late to the party. And by the way, when all desserts are gone, we still have some cookies. Please enjoy. They are real. Yes, please. And finally, the talk that I've been expecting for the whole day, because like the whole name of the conference is AI Bubble Tea, but we are actually trying to figure out whether we are in a bubble or not, what we should do. Because like throughout the day, like we have like two different stories. On the one hand, capabilities is up, cost down, and we have real usage production, we have real revenue. But on the other hand, there are a lot of uncertainty. Half of every venture dollar is going to AI. But at the same time, we have fewer companies, we have bigger rounds, we have higher prices. So the question is not like whether AI is working, but the question is what priced correctly. And that's why I'm super happy to talk to you, because you are people who are not just talk about AI, but you are price AI. And and you sit on different layers of AI, of venture capital. And let's talk about what's happening in the industry. And let's start with like quick round of introduction. Can you please say a little bit about your focus, about your thesis, and what excites you and what keeps you up at night?
Okay, sounds good. Kind of hard to follow the metaphysical talk with this practical discussion of pricing, but very glad to do it. I'm Ann Bordetsky. I'm the founder and managing partner of Elora Capital, which is a new fund focused on the agentic economy. I'm a recovering multi-stage investor, so I spent the last 5 years at NEA, which is a big platform, 25 billion under management. So I've seen a lot of kind of the multi-stage side of what we're investing in AI today. And look, I think in some ways it feels incredibly sort of like frenetic right now in terms of AI investing. There's so much capital getting raised and so much capital getting deployed. But I'm still, not to hit the punchline early, but like I debate this with myself all the time and with peers. I don't think we're over-invested in AI. If you look at the magnitude of opportunity across every industry, across every sector, unlocking sort of wildly affordable intelligence and robotics and scientific discovery, like we're just getting started. The hardest part is just teaching yourself to sort of update the orders of magnitude with which you kind of think about both investment and outcomes in AI.
Hi, everyone. My name is Serik Kaldykulov, and I'm a founder and managing partner of Elefund. I started my career as a value investor, hedge fund space, and I sort of transitioned to venture capital later, it's been more than 10 years ago. And I mean, I agree with Ann. I don't think we are in the bubble in the sense that you always have to look at the perspective of distribution. And as long as these, companies powered by AI getting to, very formidable and very solid distribution, you have something to finance, right? And that is the sort of thing that we look for. We're very early stage, seed, pre-seed. And for us, distribution and product, of course, team is very important. But I feel like these two qualities are sort of the expression of how great the team is. So for me, it's always a question of whether you have an advantage in distribution.
Hey everyone, my name's Maheshwari. I lead venture ecosystem at Nebius. I have a bit of a unique perspective on this panel. I used to be a VC, did early stage investing with a fund called Stage 2 Capital, did growth stage investing with a fund called Iconic Growth. Joined Nebius about a year ago, very much in a go-to-market oriented role, ecosystem role, figuring out how to build connectivity in and around VC investor-backed AI native companies. How can we at Nebius support them on their compute scaling? I support our corp dev team sometimes on taking a look at potential investments or M&A as well. So just sharing not a active VC, but very much surrounded by VCs, and of course spending time personally on looking at the AI value chain in public markets, etc. For those of you who don't know, Nebius is a purpose-built AI cloud. We are deeply partnered with Nvidia. So today we have a full stack cloud for AI. We build and operate data centers. We have Nvidia GPUs that we are maximizing, flops and utilization as best possible for our customers. And we're a managed cloud, so we're providing different tooling both at the middle kind of developer layer all the way to the agentic layer. Started offering not only dedicated compute capacity, but also offering serverless inference, hosting open source models. We've made a number of acquisitions that extend our reach into agentic building capabilities, inference optimization. So really wanting to be a full stack cloud, not just a GPU provider.
Yeah, I'm Michael Stewart, managing partner at M12. We're Microsoft's venture fund. I lead 3 areas for the fund: generative AI, frontiers, new AI models, new infrastructure, whatnot, the software side. Before this, I was a scientist and an engineer in the semiconductor industry, and lately I've been kind of yanked back into that side of things. And relevant to why, the question of are we in a bubble or not, I actually think in a way we're in a box. We're facing constraints in many different dimensions, not just the availability of power, the availability of semiconductor chips. We heard from this great comment from Samo earlier about the value of lithography tools driving an entire national GDP. So part of the investment thesis I'm thinking about is what do we do about certain constraints that actually limit how much or how big AI can be in the near term, how fast it can grow. These are very concrete, not all of them venture category investments, but very concrete bets we can make where we see on the other side 1 million times more token usage than today, and I don't even know if that's being conservative. So where we want to be investing still is in the software that makes our AI run better, but also in the more disruptive thesis, what is the technology that we're really scaling? Is it the best technology that nature can provide, or is it simply an extension of what we've been doing the last 50 years?
Okay, thank you so much. Before we go deeply into the bubble thing, let's go back to your experience, and I would like to ask you about your previous experience. You started making AI consumer applications very early, investing in Perplexity, 11 Labs, sooner, when everyone else keep telling that application layer is a very thin wrapper. What convinced you that the moats were real?
Yeah, I think we kind of need a new name or a new definition for the app layer, because I think the application layer companies that are winning, at least in this AI era, they're hardly just an app layer, right? Mm-hmm. They're actually kind of platform companies. And so yes, at the end of the day, they're delivering amazing experiences to prosumers, consumers, business owners, enterprises. But if you actually look at sort of what drives the honestly the value of the product, it is the ability of the teams with engineering expertise, their own research labs, their own unique research kind of in state-of-the-art models and research teams capable of producing that. Like, they're more vertically integrated than any app layer companies we've seen before, right? And so they're continuously producing the research or the highly applied productization of AI models, third-party, open source. I mean, there's so many coming to market all of the time, and then productizing that in terms of value and optimizing the cost of serving users at scale. And so what I find so fascinating about the app layer, and I don't think we're done yet in consumer AI, we will see more incredible companies. There's just few of them in any wave, but they look much more like innovation factories and kind of research and engineering first teams than pure kind of consumer brand companies.
And I know that you found Groq very early when, custom inference chips were a very long shot. What convinced you to invest in that kind of technology?
Yeah, I mean, I think for us, just understanding the landscape was the most important thing. We did this breakdown and realized, the next phase will likely be inference. I mean, there was no reason for any chip company to compete with Nvidia if you're really thinking about scalable business. And so if that's the case, then what are some some of the things that we think could be breakthrough, right? When we talk about inference, it's always about speed, and it's always about this architectural view. You do have these huge energy savings, and so Groq was the team that had that vision, right? And it almost we joke that basically when we had a conversation with the team, they sort of stenciled the same thesis that we were thinking about, and from that standpoint, it was easy for us to make that decision.
It's always about people. Totally agree. Anu, you have a unique possibility to look at what company really, how they really spend time in production, how they really consume everything in production. What do you think is the biggest gap in how investors think about AI economics?
Interesting thing, I'll share a bit of a preamble before answering that question specifically, and it also relates to the bubble topic. So something that we see at Nebius, and we're not alone, I think all of the compute cloud companies see this, is that there is not enough supply. There is not enough GPU or accelerator chips capacity relative to the demand. At Nebius, we see a tremendous amount of training workloads. I think initially that's been a large part of where we have grown. It's companies such as Cursor that we work with, or World Labs, or providing capacity to companies like Microsoft and Meta as well. And we simply don't have enough compute. Every day, I have the hard conversation with a VC or a startup to say, give us some time. We're adding more data centers. We're adding more supply. And this, I believe, is indicative that we're not quite in what may end up being a peak of a bubble, just because the true demand is so high. There's a lot of capital going to new models. There's a lot of capital going to, of course, frontier models, but then all the new ones that are spinning out. There's a lot of domain-specific models, et cetera. And if the VCs that we often talk to believe that these new models are going to monetize the way that Anthropic or OpenAI successfully monetize, then we have a long way to go. Similarly, for app layer companies, they're just getting to a lot of consumer growth, and the token usage is expanding, right? So that is also going to increase. So all that to say that it feels still early, strangely, on that bubble topic. And then what might investors be missing? I think for a while, investors were not paying as much attention to what the unit economics will look like for companies both at the model layer and the app layer. Specifically at the app layer, most companies start building on top of frontier models. And today, the token costs are exponential, they're explosive. If you're successful as a app layer company, that means you're spending a lot on tokens. You might get rate limited. And now VCs are telling myself and my team that at the board meeting, they're thinking about, okay, we have to care about margins. We have to care about potentially alternatives to purely closed models. So that's an area where I think folks are missing. Paying more attention now, but maybe 3 to 6 months ago, we're not really baking in what the unit economics would look like. And then on the model side, I think it's just uncertainty on whether all of these neo labs and spin-outs from the large frontier labs will successfully monetize. And so all of the underwriting is based on, hey, this is an amazing team. They're best at building research benchmarks. There's some early demonstration or proof, but it's unclear if they were monetized. And if they can't monetize, then that's a challenge because a lot of capital was sunk into them.
Thank you. Michael, you close to both realities, to hyperscale infrastructure and enterprise adoption. And going back to your introduction, what is actually limiting AI scaling right now, and what can be changed to have 10x AI adoption in enterprise?
Yeah, I think there's there's a physical limitation, like Anu was just kind of talking about. Every single CSP, basically everybody who is reselling compute capacity to some degree is doing a triaging or a ranking or a series of painful conversations of how can we service the demand in front of us. Some of it is contractual over long periods of time. Some of it is opportunistic. So that type of market, and just everybody has to appreciate, like, these changes in the market come within weeks or months sometimes. And just like the Groq phenomenon in AI hardware, that is something of just the last 6 months, right? Before that, we would not be talking about how great it is to invest in chips. Like today, I predict the demand will be there. There's other ways to shift customers over to more efficient or lower cost VMs or other ways to get the tokens that those customers don't care about saving money on yet. So that's something that's going to unfold, a series of like, oh, we actually can use a cheaper open source model. We can build an agent on a lower cost model and hill climb to the eval that's meaningful. During this period of time when we're just kind of turning on to the productivity of agents, we're going to have this kind of crazy overbuying, right? And yet, after that kind of adjustment, the demand will still be there. There's not that much difference in those efficiencies to, I think, free up the capacity. So what we are trying to do as investors is, one, there's some technologies or even investing in end-to-end neoclouds that offer more efficient hardware and software together that could simply run the workloads better for a particular application. You're seeing some app companies, and just being sensitive to what Ann said, an app company isn't the same thing as it used to be. They're not sitting there and just taking like their judgment that they can't grow. They're going to go out on their own and procure capacity, sometimes buy data centers. So in that environment, again, as investors, we just want to find the fastest way customers get the compute. We're getting agnostic about the technology itself. We're not necessarily thinking there's a particular model architecture, a method of retrieval, a KV cache technology. You got to put that aside to just see like what gets the tokens to the customers the fastest, because we know it'll sell. That simple.
All right, I think we have a consensus that we are not in the AI bubble, but I want to ask you to name the single most mispriced, I would say, company or product. Can you make? It should be something.
After today, right? So we had, in the public markets, we had 3 or 4 weeks, or really just an entire quarter or year to date of the entire AI value chain just trading up, right? And today, I think based on the jobs report that came out yesterday and people suspecting that rates might be going up, there was a large sell-out in that market. So I think in the public markets, a lot of things in this value chain are on sale. If you believe us that the demand will be there, that there's not enough compute, there's not enough memory, as agentic workflows increase, we'll need more memory. A lot of the different companies, right? Memory, compute, data center build-outs, etc. They might be on sale like today, for example, right? So that's more in the public markets.
Yeah, Nebius showed great raised growth recently.
Yeah, can't say more than that.
Anything else?
Okay, I'm not a public markets investor, so it's dangerous for me to answer this question because I try not to pay attention to it every single day, and nor should you when you're doing long-term like investing, although long-term in AI is probably like 2 years because things move so fast. But I feel like the market is really bullish on Meta, and I don't get it. Like I know they're investing so much in their talent, there's so much in their engineering, they're trying to go agent native internally. And when I see announcements
spending
from
a
them,
lot of money on tokens.
They are. There was just an announcement today that they're trying to figure out how to do kind of a Google type of financing where you basically do maybe like a second IPO to raise more for more compute to unlock these constraints. But then, and I say this as an app layer investor, when I see that their announcements essentially like amount to, and now we're offering a subscription product for businesses to buy an agent, like an AI assistant from Meta. I'm like, wah, wah. Is that like, I'm sorry, like all of this compute and model development cannot be, oh, here's a totally like, I don't know, expected and probably like 10th best in its category assistant that you should pay to subscribe to when all the others already exist. So maybe there's something I don't know, but so far I'm like, bearish on Meta to figure this out.
Well, we are all expecting IPOs, and we'll see how it goes. All these labs are moving up the stack and trying to compete with startups on the IPOs. Well, how to distinguish, like how to divide, like between a feature and a real company? What's your angle on that?
Oh, feature versus company. I mean, look, at the end of the day, it's like, can you deliver real value to your users or to your business customers? And I think increasingly part of delivering that value and being more than a feature, hopefully a platform over time, is you have to have a really thoughtful way in which you either control distribution or control supply of intelligence, supply of AI, ideally both, because we're moving toward a world where the big tech and the big token companies, right, this is Google, OpenAI, Anthropic, et cetera, they're becoming, a SpaceX too, so vertically integrated, right? All the way down to the data center and compute and all the way up to distribution and the application layer. So if that's where big tech is moving, if you're launching a startup today, you have to own something that is incredibly valuable. And that could be specific data that you have access to that nobody else has access to for a data network effect. It could be a user workflow. It could be the particular way that you're sort of customizing and optimizing for a particular industry, right? Or a very expert use case. Like, you have to put a lot of different things together to build real value for customers when the off-the-shelf models are frankly very, very good and getting better. So that's what I look for.
Yeah, I agree with that. I mean, I think Suno is a great example of that. I mean, there's 11 labs, obviously, that launched or tried to launch the application, and it's, I mean, the feedback has basically been terrible, and I think the the main reason is because I just don't think that labs get how hard it is to build a consumer business and how hard it is to establish certain cadence. You have to talk to the customers. You have to learn. You have to. There's a lot of data that goes through this application layer, and I think Michael, to your point, I mean, I think what will happen is the application layer will start to move down and start to kind of secure these, compute, whether or it's hardware, but it's it's going to be interesting. I certainly am bullish on the application layer.
I think it comes down to, is the company solving a pain point or problem consistently for the end user? Today, with just how much AI has become intelligent, people talk about outcomes as being really the end result. So it's less about like a specific task or specific workflow. It's what is the end outcome. And some of the examples in specific domains where this has worked really well, at least as of today, companies like Legora and Harvey in legal AI. Yes, general purpose frontier models can do a lot, probably in the legal realm, but what makes Harvey and Legora so successful, at least hearing the law firms that use them talk about it, is they're very context specific. They go very, very deep, and they solve the outcomes for a trial attorney or a securities attorney in a way that is contextual, and it's consistently driving value and ROI, as opposed to if someone was making just one specific feature or one narrow part of the legal workflow.
And I think you actually can monetize a feature in the infrastructure layer if you're really, really good at relating to devs. It depends on what size of a company you want to grow. If you want to grow like $1 trillion scale company, it's probably not going to be a feature. If you really, really solve a problem for all those other app developers and it spreads fast and you're super trusted, you actually can build a great business that stands on its own.
Thank you. I think we have time for a couple of questions from audience.
Hey guys, I think I'm going to ask the question that everyone here has probably wanted to know. What do you guys think of the upcoming SpaceX IPO?
I heard it's going to happen.
It's hard to bet against Elon Musk companies.
Yeah.
Yes.
We have Steve here, who is like the first investor in SpaceX. We can ask him. But yeah, as a venture capitalist, we are very optimistic about like a lot of things, and probably this as well.
He's
I don't know if
making
Marina
chess
knows.
moves every day. I love it. Oh, no, please.
I don't know if Marina knows, but I just applied for like an allocation in the IPO. So just like with our personal money.
Thank you to all of you for your very thoughtful conversation. I like the question about SpaceX IPO. I have a little bit relevant question, but not exactly. SpaceX initially, not just SpaceX, XAI, they initially started building their own agentic AI technologies. Then they shifted more to bare metal things and started making deals with others. Roman Chernin in the morning, he talked about how they methodically building layers after layers to make things available first to their big customers when they need it. When they will get out, they will have, like Nebius will have enough technology to give other services. I wonder what you guys think, based on all of the amazing experience you guys have, how soon we're going to see agentic AI stuff coming from that side, from SpaceX, SpaceX AI? Really wonder, given the same narrative. I'm not talking about betting against or anything. No, God forbid. I just wonder what you guys think. Because you have perspectives that most of us don't have the luxury to see it.
Okay, I'll take a stab at this. I mean, I think in terms of agentic AI from SpaceX, it's already there, right? I mean, if you think about the Cursor acquisition and the team and the code base and the technology that they're bringing over with that, I don't know where they are in terms of specific model development. But they're going to be in the game because they, to the earlier discussion, have access to the one really constrained resource, well, the only two constrained resources, which is exceptional engineers and an exceptional amount of compute, right? And if you have those two ingredients, and you can go after any market in the world because it's Elon, like I assume they're going to do very, very well. What I find interesting about the company, we have not seen so much in the past, but they might be the company that proves this out, is essentially the internal network effect. Like the idea of a compounding company, right? Where the way that they're building agents for specific robotics applications, or maybe it's something related to SpaceX itself, is going to allow them to hopefully differentiate or unlock certain capabilities that nobody else will have. And how do they create all those feedback loops? Because they're doing so many types of engineering at once within this company. That will be exciting to see.
Yeah, for me, I think it's more of a question of understanding markets. So if you were to imagine robot-to-robot transactions, e-commerce obviously is a great application. Powering these agents within these robots, within cars, where cars are talking to each other, this is where you're going to have a real opportunity. Otherwise, because it's the question of bandwidth, I always think about this new market that's going to be here where the robots will not really need us in a sense. And for those robots, obviously, these agents will be crucial.
Looks like we've just proved with our panel that we are really optimists as venture capitalists and we don't believe in the AI bubble. But I actually agree because for me, the difference between breakthrough and the bubble is just time. Who survives long enough to see the results? Thank you so much for pricing this uncertainty and believing in the future and being optimistic. Thank you.